Hi everyone, and welcome to the Power Investing Weekly Macro Review, where we take a top-down review of the markets and kind of see what happened over the last week and what that can tell us about the potential for the coming weeks. So let's go ahead and get started and see what we can find. Here we start this week again on TradingView with our triple play charts, and we take a look at the weekly to give a start. And as you can see, had big tails on the top of all of these, and they all closed near their lows, showing that buyers tried to a little bit, maybe not real hard, and then got rejected by the end of the week as we closed towards the lows. Now we're still up off of the major spike lows we had a few weeks back, but not by a whole lot on the large QQQ and SPY. So what we have to look at here is kind of where we think things are going next. From a weekly standpoint, the SPY is still in a bull range though. The Qs are just testing theirs, with CFG here oversold, and the IWM, even though it fell further and kind of fell through the bull range, its CFG stopped at 0, and it's been the strongest since. Now, these two big rejections the last 2 weeks are something to watch for. It could certainly just be a bear flag and accelerate down, but we're still really right in the middle trying to figure out whether this retest is going to happen and fail or succeed. So there's two things. Are we getting a full retest? And then do we pass that retest that we're watching for? Now, we're coming into it more oversold than we did last time on these weekly measures. However, on the daily measures, we are starting to see a little bit of a divergence from that standpoint, but we are still in bear ranges. As I flip down to the daily, as you can see, we're making lower highs on the RSI, and it's right in the middle of this bear range. The 50 level kind of stopped all three for the most part. But as we pull back down here, we have the potential, and that's only if we get another trough here. If we don't get another trough, we just keep dropping, then it's, all bets are off, and of course the bear market continues. But if we can reverse back up from here, we have that potential of getting divergences out of some of these higher levels. But at this point, we closed the week after getting rejected at the MA bands again, and the one who held up the best really was the small caps, which shows in some of the other measures we're going to look at here in a bit. It could be that they're finally just taking the generals out and shooting them, and we are getting very close to the end, or it could be just another big leg down. Anyone who tells you they know, they don't, but the weight of the evidence right now is with the downtrend. Now, when we look at the 65-minute chart, to finish this off, we are starting to see divergences form here off of Friday's lows, and we on the on the SPY and the QQQ, but not on the IWM when it comes to the CFG. The RSI on the IWM is lower as well. So again, even though it's the one that held up the best on the 65-minute chart, it's starting to look a little bit rough as well. And all of these on 65-minute are still in bear ranges. These attempts to go up midweek just did not hold and got sold into. So now when we move back over to our macro view, we're going to go down again. We'll get the breadth when we get in the universe chart. But we'll go down to our world rankings. As you can see here, it's still very much Latin America, Middle East, and some Asia. Very little developed world up here at the top of the rankings. I put in the blog the top 10 or 15, I think. And if we have to pull down and find the U.S. down here, it's all the way down at the bottom. Okay, so this is not a good setup for the U.S. It's not even really a good setup for our European and the other developed markets out there, because most of them are down towards the short-term rankings as well. It's just a matter of whether they can build bases, but for now, it's these smaller, more emerging market type economies that are performing the best and maybe seeing some of the money that's flowing out of the majors. Now, when we move into intermarket analysis, we have some interesting things to point out here. Not only are we still seeing commodities ruling the roost with oil still on top, but as you dig a little deeper, as you can see, I highlighted some in the blog, oil was actually down 1.5% and one of our worst performers on the week. We did see the Dow Jones perform a little bit worse than that, and then real estate, but right near it. But the oil was one of the worst performers at a time when we started to see some positive performance out of both junk bonds, We're slightly up here on the week, as well as TLT or other bonds. Now, what this could be telling us is there's going to be a slight, kind of a respite when it comes to the inflation fears. Maybe it's starting to cool just a little bit. This is very early, so you can't really count on it yet. But if we start to see that build a little bit, the real question for us is going to be does that actually help equities, which are right now at the very bottom, or would maybe some bond strength put in more fear? So the TLT is set up here for some decent strength after being at some major potential support and trying to reverse the last couple weeks. However, it's just a matter of whether it can see some follow through and whether equity investors will see that as a positive and take some, maybe take the boot off the throat of our technology investors down here in QQQ and give a little bit of a relief there, or if it's going to be seen as another defensive move buying bonds here. I think what we have to do is look at junk and other high yield bonds and see if they can continue to kind of bounce off their lows. The more performance we get out of them to the upside, the more we can probably expect equities to follow. TLT may be the better trade, junk may be the better one to kind of watch and see what's going on. Size and style continues to be very value focused. Mega caps aren't quite at the top, but it's still large to small. And then on the growth side, it's flipped. It's small to large. Small cap growths are doing better. Large cap growths are doing the worst here as we get to this point in the sell-off. Again, like I said, that can be more towards the climax, but it doesn't have to. You need to see the markets and buyers show up first. Something really interesting when we get into the market weight sectors, they're still lined up how they have been with energy and other defensives up top and a lot of the technology and other cyclical or offensive stuff down bottom. But I think the most interesting thing to look at this week is when we look through these here, you can see the performance for the week. Sure, in the market weighted, you saw consumer staples was up 1%, materials was slightly positive, everything else was negative. Equal weight, not much positive. The only thing here was consumer staples. But when we move down in here to the small cap ETFs, notice how much more green we have on the weekly. We have a 1.29% on materials, 0.12 financials, 0.56 real estate, 6.1 staples, 4.6 technology, 1.94% in small cap industrials, and small cap consumer discretionary was even up this week. So this is another sign that small caps are holding a little bit better during this and maybe showing some opportunities. Since a lot of these had already sold off last year or very washed off, this may be the start of a potential bottoming process, but certainly not necessarily out of the woods. There's certainly going to be a lot more volatility we continue to work with. Now, when we move over to our universe chart and kind of see where we are here, this again looks like it's trying to form another lower high here below the MA bands. It's moved back below the 9 SMA. So none of those are good from a price standpoint, but this one looks a little bit different than some of the major indexes being our equal weight. You can see again, it's holding up a little bit better, maybe in the process of trying to break this flag, or also you could be looking at it as a flag off the lows a little bit here as well. Now in a bear range, that means the downtrend gets the most favorability. But we want to kind of keep our eyes here and see, does this break on down from here, or does it continue to build a flag out if buyers can start to try to nibble after it, since we are past the OpEx. From a breadth standpoint, in the blog, you can see I split them into three different segments: the long term, the intermediate term, and the short term. So go there and kind of take a look at the separations. The bottom line is long terms are still pretty negative, not really showing much. Intermediate terms are looking a little bit better and have shaped up some, but getting challenged this week. And the short terms are also getting challenged a little bit, but still real pretty neutral. So that kind of goes back to our idea that this back test or this retest could even end up being a higher low, even though that would have surprised a lot of people, or the retest could end up being successful. Now, you got to honor the price levels. If it fails, it fails. But for now, there's some minor things in breadth and some of the momentum that look like this may have a chance. So let's keep an open mind here. When we look at the universal the universe, relative comparatives, we can also see that we continue to see improvement versus the SPY and the QQQ, and then it's kind of flat versus the IWM. This as well is another thing that shows the IWM outperformance over the very short term. On the percent making new highs and new lows, we are seeing these spike back down here towards the end of the week. We don't want to see it grow a lot, but right now it is definitely fading off of the highs just as price is, following kind of what you'd expect it to do. And then when we get into the equal weight sectors, our equal weight sectors for the week, energy was one of the worst, just barely behind healthcare. Energy at negative 3.21% and healthcare at negative 3.4%. Terrible with healthcare. It's been down here for a good while, and it doesn't look like it's coming off the mat right now. On the other side of it, energy has been one of our biggest leaders and finally took a break. Now the question is, will this be a typical commodity pullback, which has some velocity but and direction, or will this kind of move sideways here for a little while? Materials had a great week on an equal weight sector stance. That's had a lot to do with the small caps there in that area performing really well. And then you also had positives in utilities and real estate, more defensive, and then industrials. Again, the small cap and the equal weight industrials both showing that under the hood there's something going on, and it's in the smaller companies. So if you're looking at small caps, those would be the two areas I'd be looking at, materials and industrials. So I hope this kind of gets you started for the week, kind of gives you an overview. The bottom line is there's a lot of pressure on the markets. They're pretty heavy, and it feels really rough out there. Sentiment's really bad. So we certainly could break these lows and have a fast move lower. However, we haven't done that yet, so you need to be open-minded and watch the clues in the market as we go through the week and make sure that if buyers do start showing up here, now that OPEX is done and a good bit of earnings are done, then honor that and see if these markets can put us in a higher low or a short-term floor here and move our way into the end of the month. All right, hope everybody has a great week, and stay nimble.